Welcome back, future Florida contractors. We've got another great video for you today. We're going to be covering more of the Builder's Guide to Accounting. Today we're going to be covering chapters 5 and chapter 6. In my opinion, these are not the most important chapters that are in the book. Nonetheless, as like I keep saying, if it's in the book, you are responsible for it. But I'm not going to spend too much time on them. I'm just going to briefly go over a couple of important topics that I think are in those chapters. I would recommend you read these chapters, you briefly go through them because there is some important information in there, but it's not anything that is very, very difficult to grasp or understand. So I think that if you give this just a good once over, I think you'll be able to understand the content in these chapters, and it really shouldn't be very problematic. So let's get into it. Chapter 5. Chapter 5 is on page 63, and it's called Bad Debt Procedures. So pretty simple. I think even the title of this chapter is pretty self-explanatory. If your business has a few or no bad debts, you can skip through this chapter quickly. Sure, you could skip through this, but I would recommend that you didn't. Unfortunately, most builders do have fairly significant bad debts despite the protection most states offer under lien laws. Bad debts can be a big profit drain on the business. I mean, that kind of goes without saying. Pretty self-explanatory statement. When an account becomes uncollectible, you must reverse the income you recorded previously. To do this, you write off an account in both the general ledger and on the customer's account ledger. You could write off the account on the sales journal itself, but that's not what most accountants recommend. Okay? Next page. So on page 64, the top section I think is pretty important. So I think this particular section, I think you should spend some time and you should go over it. For tax purposes, bad debts can be recognized only when a debtor's business is abandoned and worthless, he can't be contacted, he passes away and leaves a worthless estate. Okay? So from my experience, whenever you get to any kind of section where they start listing certain things like in bullet points, I think that's important. And I think that's something you should pay attention to, because when they're doing that, those are the kind of situations where that area is ripe for questions for the exam. So for a true bad debt, the possibility of collection must be just about non-existent. If a debtor dissolves his business but has net assets, his liabilities may be paid. If he moves away, you must try to contact him before you can claim that he has disappeared. And if he dies, the debt is transferred to his estate. Okay? Pretty self-explanatory information. I don't remember the exact question that I had on the test, but I do remember I had a question about bad debts. For our purposes, when you see something like that on the exam and you don't really know where to look for the answer, a basic example would be to just go straight to the index. Okay, so for example, if the question is about bad debts, you go to the index, B, bad debt accounting, cash accounting, estimating, 64 through 68. Easy. It takes you exactly to where you need to be. Okay. So on the bottom of page 64, setting up a reserve for bad debt has some important advantages. First, your books are useful to you only if they reflect what is really happening in your business. Your profit and loss statement each month should tell you how well the company is doing. If you don't reduce monthly profits by the bad debts you expect, your books won't truly reflect your profitability. Second, and perhaps most important, your business pays taxes on its profits at the end of each year. If you don't adjust the accounts receivable for the bad debts that you are sure to occur, you pay federal and state income taxes on profits you never see. For these reasons, most companies that have significant and regular bad debt write-offs set up a provision for bad debt. Pretty simple. I think that's a fairly self-explanatory paragraph, but it's still very, very important. So that's kind of like the gist of the whole section, of the whole chapter, if you ask me. So here they're talking about examples. They're walking through, like I kept saying in the previous chapters, don't worry so much about these figures. If you're reading this chapter and you're following what the instructions that they're talking about, they're laying out a story, they're laying out a scenario. So you really shouldn't have much of an issue. Just kind of like read along with this and you should be able to understand exactly the example that they're trying to show you. Okay, we're not gonna do that for our purposes here. Okay, you can do that on your own. All right, and on page 68, the reserve for bad debt account is a reduction of your current assets and should appear in the general ledger immediately after the accounts receivable. Pretty important, okay? On page 69, you have your test questions. Go over these, answer these. Like I said, if you read this chapter one time, I think you should be able to answer the test questions without any issues. The answers are in the back, okay? And we're gonna go straight into chapter 6. Sales recording and cash budgeting. There's really not much here, okay? In fact, it doesn't seem like I have anything highlighted here. Like I said, but it's not a big chapter. It's only a couple of pages. Look through the chapter. There's really, like I said, there's really nothing that's super important. No really significant topics in this particular chapter. So it shouldn't take up too much time, but nonetheless, spend a little time reviewing it if you have the time. It's on page 71. Just briefly go through it. There's really not a lot of information here, and it kind of just builds on what they talked about in the previous chapter. So just go over it, read it maybe one time, and try to do the test questions on page 77. Other than that, that's it. The answers for this will be in the back. Like I said, these two chapters are not very significant in my opinion. There's more important chapters in this book, and we'll get to them at some point. So go over these two chapters maybe once, and and I think that should be sufficient. If you've got any questions or you've got any comments, please let me know. Otherwise, I will see you in the next video where we're going to move on to chapter 7. Thank you.